for those of you that are following the price action, so he's expecting that it will drop. But my own expectation is that I will say it will retrace, but it will continuously going up. Now you can ask me why.
Why?
So fundamental control is the technical one, and for the market to drop on technical level, it has to form a resistance. So it's above, it has broken this one, and it's almost breaking this one, of course. So that means it most likely gonna hit 65 or hit. So what you may see on the SO, which is Socrates, is like it will like retrace a bit and continue, then make adjustment.
Okay.
Yeah. Make adjustment. Now that is why I was speaking with Jeto in the afternoon about the oil market. I told him that we knew last year that it's gonna be sell, but it does not mean that it will not be that won't be buy, but just that because of there will be more sell dominant factors in the market, it will cause the market to go more down than they want to go up. So if we detect buying force in the market, it doesn't mean that there won't be sell, but the buying force will dominate more than the selling force. It's the same thing that's happened on gold. Most people that have sold gold have all lost their money. Isn't technical, because if you put sarcastic on gold, it will disappoint you.
Right. On the long run.
Yeah, it will disappoint you. There's no indicator that shows up and down. You put on gold, and
I
it will not
swear.
disappoint you. Yeah.
God.
So
God
yeah,
is
because of
unique.
because fundamental is more stronger than the technical.
Right.
So now it may have a retracement, but on a long run, since it has hit once it starts to, it's possible you're gonna search to this point. You see this area. Let me mark it since I'm on the chart, so I can mark. You see this area. It's possible that if by any chance it touches this point, that means it could search above it. So if you pass this point, which we expect 67, then on WTI, of course, we should expect. I think what did I mark there? Was it 62 on WTI? On WTI, we should expect about $62 per barrel on WTI. So which will give us an average how much pip? Uh, if you are still holding the positions as last, which will give us average 600 pips, which is 1,200 pips each. We have already gained 400 pips on them, so we are expecting an additional 200s to go more for us to take more profit. And here now is today it has gone 100 pips already, which is $1 change. Mm. So now what I'm trying to say in my own opinion is like this is Monday. So on a long run, oil will continuously going up. On a long run, the world is looking for every factor to push it up. Like let me shock you. This is the monthly outlook of it. Have you checked my course on psychology of trading, on trading psychology?
No.
So I want to delete this. Yeah, so now if you check the market of the day, you see that this thing is just starting.
Okay.
Do you understand? So this is like 1 month. So you can see like a very long outlook. Jeto that trade on option, you trade on option, right? Yeah. So
Yeah.
the option people can hold the position for a long time. Option can hold option for like 6 months, right? I think so. If the exchange has auto renewal, then it means that if you're able to get 1 month bullish or 2 months bullish this year from here, it could push the market to 81, and you guys will gonna cash out. Like if you
Right.
get 1 month bullish, yeah, and there could be many potentials that will push the market to that level. Yeah, so what I'm watching on daily, just like short movement on it. If you also check it on the weekly analysis, it also say that it's just like kicking off. Yeah, and if you check the stochastics things mentioned, it has not even gone over. But remember, long-term approach controls the short-term approach more in the market. So that's why on a daily, I can agree with you. It may have short retracement, but on a long projection, could be buying capacity. It has more buying capacity. So if you are trading it, my own sense of judgment this week is that we are still hoping on bullish on oil. I've made my point now. We are still holding bullish on oil. Rather, we're going to adjust our SL on CFD. On if you're using CFD, we're going to adjust our SL. Then if you're on future, of course, adjust your limit. Your limit should be around 61 on futures, 61.90. That's my own suggestions. If you're trading on futures, then on CFD, your limit should be around on CFD, your limit should be around this point on CFD. It should be around 61.50 on CFD. You should also be asking me why, because you know that you can't be with me all the time, so that anytime you're normal with me, you can be able to duplicate these things. Because CFD is more volatile and it can go more faster than the future. So for those of you that are confused about CFD is the forest one you are trading. We call it CFD. But we're expecting 65 or 66 here. So allow it a bit. Let's cash out until we have a resistance. Now there's no resistance yet. Do you understand? So that's my own point of argument. Yeah. Or point of analysis. I'm so sorry. Sometimes I use some philosophical terms. Argument is what we usually use in philosophy. Argument. We use I want to make this argument on this. When I say argument, I'm talking about my own point of view. You know what I mean? So the same thing goes on WTI at the same time. Yeah. So fine. It will continue. Let us see what's gonna happen. Yeah. But gold is our godfather. There's nothing. So gold has broken our resistance finally. And if you check my course on what I told you about law of resistance, once it's broken, something's gonna happen. But that's not even the reason why we invest on gold. So globally, there's high demand for gold. Within this month, we're gonna have gold outlook for the year 2025. I'm gonna show you guys where we go and we get the metrics of demand, quantity of demand, people who want gold demand. But the one we had 2 weeks ago also showed that there are high demand for miners. So you know how it works. Jeto, let me use it as a case study. I hope you're still here.
Yeah, I'm here.
Okay, perfect. So how it works is that the future market, which control the major market, which is the major market we trade, the major supplier of gold are miners. So now all these miners have a data where the financial expert can assess the quantity of demand that people have placed on them. So now
Okay.
when we place a trade on exchange for gold, you know that those companies listed on exchange for gold, we get that money and send to miners. So miners have already known that there are more demand for them. Like people have already placed
More
order
demand.
to buy gold that they are being mined. So even before they mine, people have already paid for it.
Right.
I mean, it has already been traded. That's why it's called future. So there's already maybe kind of a mining block of 100 million metric tons of gold, but it has already been paid even to June next year. So people have paid for it. So the miners are mining to meet up with the deadline
I
of
see.
supply.
So what you're saying is that people already place the demand for the gold. So it's
Yes,
just
we
left for the miners to mine it.
mine it, and that demand is that trade you are placing on the future.
Okay.
It will be aggregated to as the quantity of order people have placed. And the gold coming from supplier and gold coming from ordinary sellers to who have bought it before that want to sell. But the major demand we can use as metrics is the one from miners. So miners has a lot of demand for
Okay.
them, and this demand is coming from the bank. And what is the exchange? What is the platform that could make that is transparent? Was the exchange, because it's not done through the back door like black market or call you on phone, hi bros, please be
Right.
mining. No, they pass through the exchange and place the order. So when the miners deliver, then the settlement bank settle the miners. Then those who invested with the mining company as a share, the mining company share goes up. Those who are buying it as a stock will also make profit. You see how the financial market is interconnected. So you
Yeah.
guys need to learn
So
and understand
yeah, so I
the
have a
logic
question.
behind it. Okay.
Yeah, so how do we assess the information for the miners to be able to see
It's
when they
not
place that demand?
it's not something I can tell you easily. That's what we do research, analyze, and investment and invest. That's what we told you. So
Oh, okay. Okay.
there's area we used to go and get it. If you watch my picture, there's a picture I, I took with a mining company. Um, I was with a mining company. That mining company is based in Australia.
Right.
So they are
Right.
biggest mining company controlling the New York the New York Stock Exchange and the London Stock Exchange. So I took that picture with them.
Okay.
So there are some areas you go, you see their data, like you assign all the data of demand available for them. You can get it on internet, but I cannot just show you all of them because I'm not the one to extract them. I place a request, they need to come to me. I send it to a data analyst, analyze. Then before we now come out at a conclusive point, my own is to dish out exactly what I've been
What's going on?
done.
I understand.
Yeah, although I'm a data analyst, I can say analyze it, but I'm not really expert in data analysis. I can do a little bit. I know some basis of data analysis work. So we analyze it, know what exactly what's happening. But from the data we have last week, we already still have much demand. Like demand has already pushed the gold to 5,000 as I speak to you. So what you are seeing here is
Hmm.
just like effect. We see here is
Effect
effect.
of what already happened.
So it will still go to that 5,000. Yeah.
Right.
Yeah, it's now 4,600. So in the future, we have about 4,000 people remaining. So if you're holding a trade with 4,000 pips, expecting it, that'll be about $40,000 on $10 contract. Then if you are holding with $20, that'll be 20 on $20 contract. But now what you have to know is that there is no particular time it will get to. But some analysts are expecting that this year it will get to 4,000. I mean, and the way I'm seeing it by March, we may be seeing it around 800 or at least 48. Or you know what I mean? Because it's already like, yeah. So what
Okay.
I'm saying is that our analysis on gold still remains strong. We have gained so much. How much have you gained so far? This is where we're supposed to place a trade. I think here last week. Yeah, so it has done 775 pips. Sorry, 275 pips already. And it has broken this point. So my logic here remains we are still holding bullish on gold. We are not gonna go bearish. If you're on the CFD patch of trading, I will suggest you put your SL within this point. Like 4-5, whereas 100 pips away. Then if you're on the future part of trading, you put it for 450, like 4-5-50, like half of it, because future is not as volatile as CFD. And also depending on the margin your exchange or your broker is giving to you. I like as we're expanding because last year I didn't have much future traders here, to be honest. So that's our logic. So we don't have a take profit on gold. For those of you don't take profit, just be cashing out. Yeah, just be cashing out. So if you want to buy suya, if you want to buy suya and you check your bank account, no enough money, you just go to your trading account and collect the profit that's available there. You buy your suya, then you come back, then you continue your stuff. Uh, you know what I mean? So you want to buy yogurt, you don't have money, you come to your trading account, you see that gold has cash out some, then you withdraw, then you buy this thing, then So there's no take profit on gold, no setup, because it's all about keep printing and keep going. So any form of retracement give us opportunity to buy more. Yeah, that's my own logic on gold. So that settle continues as we speak. But there's something important on oil I did not let us know. On Wednesday we'll have another report, but they have not really published what's gonna be the expectation so far here. So they have not published it. Let me show you before I forget. here. They have not published it. What's gonna be our expectation on oil? It's called the inventory report. But those of it, I hope almost everybody knows about the oil now. Is there anyone here that doesn't know about it? Someone told me, say, and Donald Trump is threatening Iran. It will hit very hard. Once it's happened, oil price will spark. Yeah, yeah. The boss is extremely low. It has change going on. Okay, I'm following the comment on the YouTube as well. So is there anyone that does not know much about inventory report? I think almost all of us know about it. Yeah. So now, so we're expecting a report tomorrow, which will be like a forecast, but on by 3:30 we are gonna hit it hard on it to see the impact is gonna be what will be the actual report, and we're also expecting to be a shortage because there's already oversupply in the market. So we're expecting shortage of supply, oversupply. That's how the law of demand and supply works. When the people supply too much, they may end up not supplying more because the one that have supply have not fully been sold. And we're also expecting OPEC to do something to know whether there could be production cuts in the future to stabilize the price of oil. Yeah. So these are the major things we're gonna focus on. Yeah. Then we hit the FX market strong as well. We use euro and dollar for it. Let me show you. Yeah. So I don't know if any of you missed this market because we didn't let you know on time, but we bought it in the morning. You know that we told you last week we're gonna tell you the next point of entry on Euro USD, but we didn't let you know on time. Do you know if you maybe like pick the price?
Yes, I did, but with little volume.
Okay, and you made profit.
But I have not taken the profit though. It's still there.
Oh, okay, perfect. But I like as you're trading. What's the name, please?
Nkechi.
Okay, Nkechi. Oh, perfect. Um, so our analysis on gold is on USD is strong, but there are two things that we are considering concerning the euro and dollar. Please take note of it. Our fundamentals on them is tied to the economy of these two countries. So because the strength of the economy impacts on the strength of their currency. So we are expecting something that the US market may not be very much good based on what this man is doing. Can't you see what the ice crisis and that could be the potential spark of maybe global concern concerning the US policies. So potentially this could weaken their currency as I speak to you because of once the stock market is affected, it will affect the economy. You know that the economy is tied to their currency. So we are expecting a bullish. This was our first bullish here. Here was our first bullish. So it didn't work. We wanted to give you another one. Now, this one has fully formed. So our potential SL it should be around 1.16. 1.16. But if you are trading it as a future, you put about
Okay.
around 1.164, like like half of it, and our exit point should be around 1.17. Yes, but we're expecting that the dollar will go weak anytime soon, and it will stabilize the euro. because of the Eurozone doesn't even want to hear what Donald Trump is talking about over Greenland. So this was the analysis we wanted to share with you. We promise that we're gonna let you know the next entry, but we missed the timing in the morning. But it is still very valid. If you check our Telegram last week, we told you we're gonna tell you the new entry. That was this new entry. So assuming you entered it, then even if you had had a loss on the previous one, probably must have recovered for now. But I'm trying to say that it is still very valid. We'll let you guys know again on the group. So since it has formed this thing, this is what we call mini support, which is also a very strong one, and it has already turned the metrics of trading here. So potentially we are also going bullish on Euro USD this week. So if you have any objection, just please let me know. Potentially we are going bullish on Euro USD this week. I'm just checking how the other market react, how their market look like. Potentially we are going bullish on Euro USD, and which we may. Yeah, the same analysis applied to Britain pound USD as well, potentially too. So we are also going bullish on them, but here will be our exit. Our exit will be within this point. Yeah. So you see this area now is our potentials. I don't know whether I'm making sense or I'm not making sense to you guys. Yeah, I'm checking my comment so to know if I'm making sense. Yeah. So this will be my own outlook for the week of for this week. It is a follow up of what we have been doing, both on gold, oil, and FX. So my question is now the open question: is there anyone who is battling with any instrument that he wants us to look into? Then before I go, but I go straight to say my market. Are you holding a position that that's difficult for you? You wanted to look into, please.
There is this trade I
Okay.
have in one of my accounts. That is euro. It's not euro. Britain pound.
Mm-hmm.
It's the system that plays the trade for me since last year.
Mm-hmm. Mm-hmm.
And almost at the top, that's when he entered the trade. So the thing started retracing. As of last week, before the market closed, it was about, as in lost, about $17 each because it was two.
Mm-hmm.
But this morning, when I wake up, even when the market has started going to my direction, I noticed that each of them is now about $50. That is $100 a loss. I tried to chat you on WhatsApp.
Did the market change?
It did not change.
Was it buy or sell?
It did not change, but
I mean, was it buy or sell?
The loss I'm having is too much.
I mean, was it buy or sell?
It was sell. It was buy. Buy.
Okay. If it was buy, probably it can be reducing by now because the market is going up today. Maybe you bought at a higher price, and brokers can change their spread at any time or margin. Check the margin given to you. You can actually it always change probably during high market volatility.
It's the GF tab that web trader that I'm using.
Okay, web trader. So it cannot. It could be margin. It could be spread. It's these two things. That's also if you check some pro firm account, they don't allow you to hold position overnight because of the liquidity can change spread, and what could cause that is only spread. or margin. Maybe they must have changed their spread because of this time of uncertainty. Some of these exchange and brokers, they always like to be on safer side, where they adjust their spread. Once the market close, then they adjust it because they don't know what's going to be the future. So if not that, some of us cannot be making profit every week. I could have been suggesting once week close, we close our profit, then open it. I mean, we close all our trade and open fresh one. But it's not possible to keep trade on profit every week. Yeah, maybe just give you some time. Kind of, it will contrast, and you will you'll be on profit. Those ones are beyond our control.
Okay. Because
Do you
I've
understand?
tried
Yeah,
to
yeah.
place another trade. The spread was still okay, very small. So I was
Uh, uh,
wondering what is the problem.
that means it could be the spread of the one you have already placed. So look at what happened. So if you place a trade and probably you get charged on spread, does not mean that if you place another one, you're gonna be charged the first one. So the spread and whatever varies. So if market stabilize, you may have a new spread that they will charge you. That's how all brokers does. But those ones are just beyond us because they can do whatever thing they want. They can fix their spread, they can remove it, they can fix their margin, and can adjust it just based on how their liquidity is coming from. Do you even know that even this spread and stuff, it's not even controlled by brokers. Just the brokers are just the scapegoat. It's actually controlled by liquidities, those who are supplying those prices. Who supply all these prices you see here? This is 1.34. It's those people who owns this price directly. They're the one that control those things. But the major one that's supplying the price we should buy, the price we should sell. What brokers does more is to do a markup, maybe add a small thing to make more money from you. So when their major supplier add, then the one the broker have added sometimes is constant. So the more these people add, the more the broker own automatically keep adjusting. Yeah, that's how it works. It's not even broker that control these things. It's liquidity, those who supply the price. But maybe it could be just because of the trade was placed on weekday. I don't know whether the charge swap on weekend rather. If the charge swap because of contributor, but I'm not sure if the charge swap on it. Yeah.
Okay.
So perfect. So for those of you that are very much busy, you don't have all the time to trade. Don't have, we have already analyzed on gold. Somebody say gold. We have done analysis on gold. Our gold analysis is still very powerful. We are not buying. We are not selling gold. We only buy gold. Gold most likely we're gonna hit 7,000 and sorry, 5,000 in the future. So if you want to buy Lamborghini,